live now?
You live now?
The views and opinions expressed in this broadcast do not necessarily reflect or represent the views and opinions of WGR Network. Any questions or concerns about what is said should be directed to the show host, whose information will be provided upon request.
Ten seconds. Five seconds.
Hello, everybody. Welcome back to Let's Talk Money 2020.
This is my favorite day of the week on Friday when I get to come in and talk about money. There's a little echo in the system here. Let me try to fix this real quick. Just give me a second. Okay, I think I got it. That was my bad. Hey, so remember what we're trying to do is we're trying to really understand financial statements so that we can either, buy a business, invest in stock. We can understand what that company is all about from a financial perspective. We might want to sell our business. We might want to see how our business is doing. Your accountant might come to you and give you these nice, pretty financial statements, and it can be overwhelming. All the numbers, all the pages, and trying to understand how it all works. So again, what we're just trying to do, we're just trying to make sure that we can take any financial statement, we can delve into it, we can understand the relationships, we can really talk intelligently about these financial statements. So over the past weeks, we've been talking about this hot stock, Tesla, right? And we've been talking about other companies and how their financial statements look. Today, I'm going to actually get into more of the cash flow because, like I told you before, income statements are real nice. They show the revenue minus your expenses and what your net is. That's nice. But me personally, I like to follow the cash. So what I'm going to do is I'm going to get into the cash flow statement because to me, whether I'm going to invest in the company, I really make the decision of how much cash do they generate. It's not about the revenues to me. It's not about the bottom line a lot of times. It's just not about those things to me. It to me is about how much revenue, how much cash that the business actually accumulates, and then what type of cash are they accumulating. For example, are they accumulating the cash from operations, which is always a plus for me because I know you're bringing in cash. You're bringing in that dough from the operations, right? Is it from you actually are going out there getting loans? That might not necessarily be a good source of cash for me if I'm going to invest. Or do you have investors that are actually investing money into the company? Are you selling assets? There's many ways that you can actually generate cash. But for me, I'm trying to figure out how this business actually generates cash because, like they say, cash is king. So, like we did last time, we're going to look at Tesla's second quarter income statement first, just to show you a little something. So remember, they had well, before we go there, always remember these statements that say the numbers are in the millions, thousands, or whatever. Don't let that kind of throw you off. If the numbers are in the millions, all you're just doing is adding 3 zeros to the number. That's all you're doing. So the total revenue here is going to be $6 billion. Right? So in the second quarter, they had $6 billion, right? And I'm going to show you why all the rave is behind Tesla. Now, another thing we want to look at is just because you're making a lot of revenue doesn't mean that this is a great company to buy, a great company to sell, a great company to do anything. The top line, the revenue, is a good indication. It's a good indicator of how much revenue you're actually selling. But it doesn't necessarily tell the full story. So I'm going to prove that to you today. So $6 billion in revenues, and this is Tesla. So what I'm going to do here, I got a bunch of screens open, so kind of bear with me here. I think I'm going to hit on the right screen here. So let's look at the second quarter. As you can see, this is General Motors, and all of us, we know what General Motors is. We know what General Motors stand for. It's a U.S.-based company, been around forever. So the revenue that they generated in the same quarter, the second quarter 2020, was they generated $16 billion.
in revenue. Now let me go back here to Tesla, so you see Tesla again. Tesla actually only generated $6 billion. So you got a large discrepancy there as far as the total revenues. But that's not telling the full story. If I look at the way General Motors performed as opposed to Tesla over the second quarter, Tesla beats them hands down. They just beat them all the way around. But let's look at a few things on the income statement here on General Motors. Let's look at the net income. You see here, they lost $806 million, right? And I know a lot of things were going on. You had COVID that was going on. That was a major thing. So they lost $806 million. Let's look at Tesla from the same period. So Tesla, the second quarter, you can go online and you can get these same statements here. So Tesla, if my cursor would actually cooperate with me, they had a net income of $129 million, positive income, $129 million, as opposed to General Motors, they lost $806 million. So you see why all the buzz is really about Tesla. That's one thing. They're finally turning over profits. But here's a company like GM that's been around for a long time, and you would think that GM would equal or exceed Tesla as far as the net income is concerned. I just showed you how General Motors had $37 billion in sales. You had only, I think it's $6 billion in sales for Tesla. However, the net income was a lot better for Tesla. So you got to drill down a little further, and you got to say, well, why is it that a company that's just bringing in $37 billion, they're losing $806 million, then their spend is way too high. So, and if you look at their plants and all the assets that they have, and all the employees, their spend is a lot greater than Tesla, and that's why Tesla is beating them as far as the net income is concerned. But there's one thing that I want to show you. Most people get kind of thrilled over the fact that you saw large revenues for General Motors. But let me show you something that's going to just blow your mind here. I did a spreadsheet here. Let's see if I can find it. I think I closed it actually. Let me see if I can open it real quick. Yeah, here it is. So let's look at what's called market cap. So let me define what market cap means. When you look at CNBC, which I watch them every day, because anybody talking about money, I'm going to watch them every day, right? So market cap is defined as your total number of stocks multiplied by the stock price. So it gives you an idea of how dominant that company is in the market. Again, you take the number of shares that you have outstanding and you multiply that by your stock price. That tells you your dominance in the market. It's called market cap, right? So let's look at how the U.S. companies are doing. So we can pan down on this screen here. So the market cap for GM is $43 billion. Okay, that's pretty impressive. The market cap for Ford is $26.8 billion. Still in the billions. Anything in the billions sounds like a lot of money. Fiat Chrysler is $22.64 billion. So they total $92.5 billion. Right? That's the total market cap, and that's pretty impressive. But let's take one company. We're going to take Tesla, and we're going to look at why all the craze is about Tesla. Guess what? Tesla's market cap is $415 billion. You're talking about a company that hasn't even been here for 20 years. Their market cap, let me say it again, is $415 billion. Let's look at the stock prices. The stock price for Tesla is $2,255 today. Just look at the traditional car manufacturers, your GM, Ford, and Fiat Chrysler. GM is selling for $22.65. Again, Tesla is selling at $2,255 per share. My God, that's you can't even wrap your mind around how rapid the market cap that Tesla has actually created in such a short span of time. And this is why everybody is dumping their money behind Tesla. If you look at what's happening, the U.S. manufacturers are way behind as far as electric cars are concerned. And Americans and people throughout the world are really betting on the growth of electric vehicles, electric technology, batteries. One thing that's driving Tesla's stock price, and other things you gotta keep looking at, is what are they saying in the news about Tesla. This is beyond just the financial statements, but on I think it's September 22nd, Tesla's going to have this big announcement that they're going to make a battery that will last 1 million miles. I can't even wrap your mind around that. This is everybody thinking. They're gonna come out with a battery that's going to last 1 million miles. And let me just tell you what that means. There is a company, let's see if I can find it. There is a company that I'm being honest with you, you might want to look at this company to invest in as well. This is a Chinese company. Let's see if I can find it here. I hope I pronounce it right. It's called Xpeng. They produce electric cars as well. But let me tell you something that happened with Xpeng. Xpeng had an IPO over the last week, so now they're trading on the U.S. stock market. So Tesla's going to have some competition. This car really, it kind of relates to the Model 3. One of the cars relates to the Tesla Model 3. And then they have a SUV as well. But I think their real big seller is going to be the car that really competes with the Model 3. But they just came up with an IPO. And of course the IPO means they're just getting started, and they're just selling shares on the New York Stock Exchange. So they just started actually putting their shares on the market. But now their shares are selling for about $15 a share. So if you are really considering getting into that electronic market, then if you want to take a risk, and I don't think it's a real big risk. If you want to take some risk, I would buy some of this company. I love Tesla, but I would buy some of this stock. This is going to be Tesla's competitor. It might not be Tesla's competitor in the U.S., but it would definitely be Tesla's competitor in China, which is a huge market. So that's why we have to understand the financials. We have to understand the impact on the financials and what they're doing as far as the global market is concerned. So the reason why I mentioned the battery is because this company here does not produce its own battery. Well, guess what? They're trying to wait to see whether Tesla really is going to have a battery that will last 1 million miles. Because they probably will go to Tesla and say, hey, look, can you build my batteries? Or they may try to actually imitate the technology behind it, which is going to put them back several years. I don't think they're going to be able to do it that quickly. But the point I'm trying to make is there are more competitors that are coming into the market. The traditional car manufacturers are coming out with electric cars, but the problem with them is they're so far behind that I don't know whether they'll ever catch up on the game. Now, just the reason why I'm saying it is, if I'm going to show it to you one more time. Look at the share prices. They have almost no electric car footprint on the market these days. So again, look at the financials. Look at how the older car companies, they were outselling these newer cars. Yeah, they're outselling them, but they're in the end, they're not going to make as much money. They're not going to have as much market cap, and they got a lot to really catch up on. Now, I'm going to take a break here. We're going to come back and we're going to talk again about stock splits. Remember, I talked about stock splits like last week or the week before. And I showed you what the stock split would be when Tesla does a stock split and Apple. Well, there have been some changes because the price has gone up. So let's take a break here. I'll come back and I'll talk about stock splits a little bit, and I'll talk about some other things. So stay with us, and we'll be right back. Hi, I'm Troy Emery.
Here at TD Emory & Associates, we offer a wide variety of business tax services for small and large companies, including corporations and partnerships, nonprofits, and real estate taxation. Also, we offer audits, compilations, and reviews.
Let our knowledgeable staff at TD Emory & Associates help you optimize your tax benefits today. Dependable, accurate, trustworthy. TD Emory & Associates. Dependable, accurate, trustworthy. TD Emory & Associates.
What is this? The IRS?
We know that your tax preparation requires more than just the basics.
Hi, I'm Troy Emory, and I've spent my entire professional career helping taxpayers in a variety of tax issues. Let us show you how to confront and solve tax issues with every viable option under the law.
Call the tax team at TD Emory & Associates
as promised, we're
now.
going to talk a little bit about stock splits again. I'm going to show you something I had on the screen here a couple weeks ago. At that point, Tesla was actually selling for about $1,600, and I'm going to just make a long story short here. I'm not going to rehash this, but Tesla is going to do they've already actually done it now, a 5-for-1 stock split. So starting on, I believe, the 31st or the 1st, you'll see that the price of the stock just dropped because, again, just as a quick example, if your stock is selling at $1,500 a share and you do a 5-for-1 stock split, that only means they're going to give you 5 shares for every 1 share that you have. That means that your stock value is going to go down by that same proportion. So this is just a quick example. $1,500, that's what they were selling for. So after the stock split is all said and done, if it was still $1,500, that means that your shares would be worth about $300 a piece afterwards. And then, if you recall, and if not, you can go back look at my prior videos as well. If you held 1,000 shares of Tesla and the split, and you waited until the stock rebounded and went back to its $1,500 value, you would have went from a $1,500 investment to a $6 million investment. So let's just do a little bit smaller. If you owned 100 shares of it today, it would be worth $150. Assuming it was worth $1,500, you would have $600,000 after it kind of rebounded, the market rebound. And then if you were one of those lucky souls, and I was not one of those lucky souls, or else I wouldn't be here, had bought you bought your shares initially at $10 a share, you would be sitting on about $2.5 million. So your $10,000 investment would have been $2.5 million at least today. So I'm going to show you the actuals, what it looks like today, just to give you an idea. And before I do that, I'm going to tell you why I'm doing this. Is because, we got to get out of the game of being consumers. We got to get out of the game of buying shoes, cars, houses, whatever. We can buy a rental property, but we have to get out of just buying the biggest house, the biggest car, the biggest boat. We got to get out of it. This is where the real game is made. Once you make your money selling these stocks and understanding how the financials are, how stock splits work, how stocks work in general, how puts work, how calls work, how options work, we can make our money that way. And if we want to go buy the nice big car, we go buy the nice big car. We want to go buy the nice big home, we go buy the nice big home. We won't even feel the pinch. So I'm just letting you know here. Look, this is today. So it's Tesla is selling over $2,200 today. So after the stock split, you're talking about $440 per share. It's still kind of expensive, but not as expensive as $2,000 some odd dollars. The average person can afford some stock in Tesla at $440. So if you were to just wait until the stock kind of rebound, you probably have to wait 5 or 6 years, and maybe I can't tell you. I don't have a crystal ball as far as when it will regain its value today. Each share would be you would have a gain of $1,760 per share. So just to let you know what this means. Just suppose I own 1,000 shares today, that will be worth $2.2 million, and if I waited until the shares actually retain this value, I would be sitting on $8.8 million. So let me just break it down to like a real simple thing here. Let's just say if I own 5 shares today, that would be worth $11,000. If I waited until the shares regain this value, they would be worth $44,000. So you get what I'm saying. So I don't think investing into our clothes, investing into our cars and whatever we're blowing our money on, and I've blown plenty of money. I'm not holier than thou. I've blown plenty of my money in my life. But what I'm saying is, knowing what I know now and knowing that what we're saying now, we have to take that money and we have to invest wisely. We have to guard our money and not throwing it away, and understand, hey, look, I need my money to grow. If I get my money to grow, hey, look, I'm be looking pretty one day. So let's try to change our habits just a little bit. I know I'm going to change mine, especially when I see numbers like this. Let me show you what really drives me. So look, if I bought the stock for $10 a share a long time ago, and I bought 1,000 shares, the shares would have been $2,190 at that particular time. If I had spent the $10,000 investment, say 15 years ago, $10 a share, I'm talking $10,000 investment in Tesla, I would be sitting on $4.7 million today. I'm talking a $10,000 investment, waiting 10 years, $4.some million. You can't beat that anywhere. I don't care what you invest in. You can't beat that. But so we have to get in the habit of looking for that next big thing. And there are plenty of stocks out there that are real small that we can actually invest in and just wait and then enjoy the ride later. I told you one that may happen in this broadcast. If you believe in the electric car market, then you know that Chinese company is going to get some traction, and you know in 10 years it's not going to be selling at $15 a share. It's going to be selling a lot more than $15 a share. So, I like the technology sector because, I grew up watching technology and watching it boom. Some people like, slower markets. That's fine. But my point is, let's understand the financials. Let's understand the financials. Let's not look at things that are hot and say, okay, I'm just going to invest my money because it's hot. Let's look at their financial statements and let's prove why we think it's hot by looking at the numbers. So I'm just going to run through this like I did on the last scenario. So if you had a $10,000 investment, you would have actually be sitting on $4.7 million, right? Based on the stock price today, $4.7 million. And then if you took that 1,000, if you just said, okay, I'm going to just hold on to that 7,000 after the stock split, that's another $8.8 million. So that's a $10,000 investment going all the way to $13 million. I'm going to end this conversation right here, because I just want to leave with this. $10,000 investment, waiting 10 to 15 years, and that $10,000 investment becomes $13 million. Enough said. So let's pick this up next week. Enjoy the week. Start looking at financials. Start trying to understand the numbers, and let's get rich. Until then, I'll see you next Friday.